Good morning. Welcome to the ADS Securities Markets Update. Beginning with Asian session today, there was a collection of economic releases from China which had a notable impact across the session. The Chinese growth figures came in with mixed outcomes. The year-over-year GDP posted a 7.3% growth in Q4 comparing to the same growth rate in Q3 of last year. However, this is beating the economic estimates, which were to decline further toward 7.2% or to slow down towards 7.2%. However, the quarter-over-quarter GDP slowed down further and more than expected again toward 1.5% in Q4 comparing to 1.9% in Q3 of last year, while the estimates were to decline slightly or to slow down slightly toward 1.7% only. The fixed asset investment also slowed down to the lowest level since 2002 at 15.7%, down from 15.8%, matching the market's estimates. However, the industrial production and the retail sales figures came in much better than expected. The year-over-year industrial production increased by 7.9% in December comparing to 7.2% in November, while it had been anticipated to rise by 7.4% only. And this is the biggest year-over-year increase since September of last year. Finally, the retail sales increased by 11.9% in December comparing to 11.7% in November, while the estimates also were to rise by the same rate of November by 11.7%. And this is the biggest and the highest reading since July of last year. The Chinese stocks also today had a relief today following the GDP figures after declining by more than 8% yesterday. The Hang Seng Index added more than 0.5%, while the Shanghai Composite Index increased or added more than 1.20% so far. The Aussie and the Kiwi, in addition to the yen, took the head during the session following the Chinese data. The Aussie fell toward or to as low as 81.60s, down from 82.15, while the Kiwi tumbled from 77.80s towards 77.20s so far. And finally, the dollar yen rebounds above 118, reaching as high 118.30 so far. As for the European session ahead, there are 40 economic figures will be released across the session, which may have a notable impact during the day. Beginning with Italy, the trade balance surplus is expected to decline toward 4.32 billion euros in November, down from 5.40 billion euros in October, which would be also the lowest surplus in 2 months. In Germany, the PPI is expected to decline again by 0.3% in December, comparing to no growth in November, which would be also the biggest monthly decline since March of last year. The key figure for today in this session is basically the German ZEW Economic Sentiment, which may recover further toward 40.1 in January, up from 34.9 in December, which would be also the highest reading since March of last year. However, we believe that the index may disappoint and may come in less than expected. Finally, the Eurozone ZEW Economic Sentiment may rise again or further toward 37.6 in January, up from 31.8 in December, which would be also the third monthly increase in a row and the highest since June of last year. Going forward to the US session today, there are only two economic releases from the US and Canada, which may have only a limited impact across the session. In Canada, the manufacturing sales is expected to decline for the second month in a row by 0.5% in November, comparing to another decline of 0.6% in October, which would be also the biggest monthly decline in 4 months. Finally, in the US, the NAHB Housing Market Index is expected to rise slightly toward 58 in January, up from 57 in December of last year, which would be also the highest reading in 2 months. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.